Hello everyone. So today in this topic we are going to discuss the strategy to clear the BFM subject. We know that is Bank Financial Management. That is Bank Financial Management. And in the CAIIB exam, this subject is very important, and also to score the passing mark itself is a tough thing. So to clear this exam, at least to clear these exams, you need to follow your smart strategy. If you want to read more, you can go through the completely the book that is the Macmillan book. Macmillan book referred by the IIBF blindly bit by bit and every line to understand the concepts. And this book is also useful to understand all the topics related to bankings. Maximum topics are covered. And for this you need to, if you want to at least pass the exam, then you need to follow some smart strategies. That means here also, like before, here also you will get 4 modules: A, B, C and D. And in these 4 modules you need to follow the Macmillan books that is referred by IIBF. As you know, to pass, if you are attempting all the subjects in one attempt, then you need to score at least 45 marks. And if you are attempting this subject only individually, then you need to score minimum 50 marks. So you need to target at least 50 plus, right? So but in the before the exam we don't know how much mark we are going to score. That means you, in this subject, if one thing you need to do, that is you have to make yourself confident. That means read that much which makes you to confident to attempt the exams, and positivity, then only you can clear the exams in one attempt itself. So here we are going to start in the module A. In the module A, that is international banking. This is the module A. There are 4 modules: A, B, C and D. In the module A, that is international banking, this will cover, out of 100 marks, this will cover 28 to 30 marks. This is cover itself 28 to 30 marks. And this BFM, this is maximum is, that is like 60 to 40. 60 to 40. What is 60 to 40? That is 60% is numerical and 40% is theory. So here this is the one strategy you can make. If 40% is coming theory, that means make yourself that much confident that you are going to score this 40%, 100%. You are going to score this 40% compulsorily. If you are getting this 40%, then out of 60 you can easily get 20 marks at least, or you need to only 5 or 10 marks. So here you need to make yourself confident or make yourself ready for this 40 marks first, then you can easily get this passing mark or to clear the exams, right? So make your strategy by your own, in which module you are comfortable with respect to exams, then it is very important. And to score these marks, this module A will play a very important role. This module A, international banking, because here 30 marks, approximately 30 marks will come, and nowadays IIBF is asking only case studies, right? So here the first unit is exchange rates and forex business. This exchange rate, this is very important, because here all the rates and forex business, here some basic things, and also some, that is FEDI and management system, that first and settlement and mid management, like this, and back management, and some numericals from the exchange rates, right? That is buying rate, selling rate, these rates, numericals will come. Numerical means that is will be in the case studies. This is from like something like 5 marks compulsorily. And like FEDI, we know foreign exchange authorization of India, right? Decoder authorization of India, so the theory and also numericals. Mainly numericals will come. Basics of forex derivatives. Then basics of foreign derivatives, it includes derivative products. All the derivative products, like risks, exchange, settlement risks, etc. It also includes. So this is something like 2 to 3. 2 to 3 marks. Just remember the basic definitions, right? Then correspondent banking and NRI accounts. Here it will include, this is very important. Like here also 4 to 5 mark question or case study will come. Here it includes something like NRI accounts, NRO accounts, FCNAR accounts, and also Nostro, Bostro, and Loro accounts. That is one case study will come, and some practical exams like A is the foreigner, B is the foreigner, he wants to have some accounts, what is the account he can have, and these will be the options. B will have, these are the options. So case study will come directly questions. If you are very aware about all these definitions, then you can easily get these questions, right? Then next one is documentary of letter of credit, LOC. That is documentary letter of credit. This is very important also with respect to exams, like 4 to 5 marks. That is here complete details like applicants, issuing banks, advisory banks, beneficiary banks, types of policy, that is irrevocable, irrevocable. We are going to discuss all the details, but I'm just giving you some hint, something like this. So this is very important. Complete directly case study will come, and in that questions you will complete like A is the bank, B is the bank, C is the customer. So who is the A is the issuing bank, B is the beneficiary, like this they will ask completely. So for this you need to clear your definitions first, then only you can easily answer these questions. So then facilities of exporters and importers. What are the facilities? You need to know the first, and in this also the questions will come like one case study itself, 5 to 6 marks, 5 marks. Then facilities of exporter, that is pre-assignment, pre-shipment, post-shipment, that is numericals. Then factoring is also normal finance, forfeiting, exporter finance, like this. So for this you need to understand the concepts first, then only you can easily answer the questions, right? Then risks, trade, really role of risks in foreign trade, the role of ECGC. Export, what is the definition of ECGC? That is Export Credit Guarantee Corporation. Export Credit Guarantee Corporations, ECG, that is risks in foreign, that is ECG policies, insurance for the exporter, all this. This is 2 to 3 marks. You can expect some theoretical questions from this. Next one is role of Exim Bank, RBI, or Exchange Control of India, that is FEMA, FEDI. These are the theoretical things. You can just go through this and you can expect something like 2 to 4 marks from this only. Role of Exim. But so here in this module, this is very important because it includes theoretical part that will come in something like case studies. So unit 1, unit 3, and unit 4 and 5. This 4 will come something like numericals, and others are some theoretical things, right? And make sure this exchange rate, every year they are asking this exchange rate compulsory for 5 marks, that is case studies, right? So next one is, that is the module B, that is risk management. And with respect to the exam, this will also play a very important role, because from this risk management you can expect both numerical and maximum questions will be like theoretical, right? So and also some risk calculations, Basel III firms are there, so you can expect like something like 25 to 28 max from this module only. 25 to 28 max, right? So here first, that is 8th unit, and in this module that is the first unit, 8 unit risk and basic risk management framework. Risk, some definition, risk and basic risk management frameworks. Here it includes some theoretical questions like identifications of risk, identification, and then measurement, and then mitigation of risk, then volatility of risk. Then this will be like volatility, this will be one, this can come like a numerical questions like monthly volatility, as for example monthly volatility for calculating. That formula you need to know. We are going to discuss more details in upcoming videos, like daily volatility multiply, that is number of days in that month. So like this, in this units you can get both numerical as well as theoretical questions. Then risk is banking business. Risk in banking business, like what are the risks? So this is very important. Theoretical questions directly will come. What are different types of risk? Like we know liquidity risk, market risk, operation risk, and credit risk. So they will give one examples and they will ask which risk this is this market risk or operational risk. So for this you need to clear your all the details of the definitions at least. Then risk regulations in banking industry. Next one is risk regulations in banking industries. That is, what are the approaches to mitigate the different risks like credit risk, market risk, different types of risks. Like there are something like haircut, horizon, vertical dissolutions, like this. And next unit is market risk. Here we will discuss the complete details of market risk individually. That is, what are the approaches and some numericals. And from this unit you can easily get something like 3 to 4 marks. And from the first unit for the volatility, 5 marks case study, 4 to 5 marks. Risk in business, that is 7 to 8 marks. Approaches, different types of approaches are there. For this you need to go through the Macmillan book completely, and we are going to discuss the materials in the upcoming videos with some case studies with respect to exams. And risk in banking exams, that is 7 to 8 marks, and market risk, that is 3 to 4 marks. Then credit risk, some basic definitions, that is 2 to 3 marks. That is identification of credit risk, measurement, mitigation. In all those risks there are 4: identification, measurement, mitigation, and derivative. CDS, credit default ways, CLNS, CL note. Then third, that is the next unit, operational risk and integrated risk management. That is basic indicator. There are some approaches to mitigate the operational risk. There are basic indicator approaches. For this operational risk, basic indicator approach is used. So here also 4 to 5 marks. Real operational risk is very important with respect to exams. Liquid risk management, that is also part of the things. And in the Basel also we are going to get Basel 3. We need to know, that is Basel 1 and 2 and 3. And Basel 3 framework, you need to clear the doubts. Here also 2 to 3 marks. So like this module is very important with respect to the exams. And first module is, we know already, important. Module B is also important. Here it both the module have some questions from the numericals as well as from the theories, right? So while preparing, do your smart work. Next module is module C, Treasury Management. From this is only theoretical questions will come in the exams, that is case studies. So as this is theoretical, we can expect like 22 marks from this module. So here you need to at least complete this module with 100% effort. First complete this module, that is very easy. Treasury management you all know, theoretical questions, so go through the terms and you can easily take the right option. So first unit in this module is introduction to treasury management. Just some basic definitions are there, and here it will it will include like liquidity and risk management, the dealing room, back office, front office. These are some basic definitions, right? So go through the Macmillan rule, you can easily understand, and we will also cover this in upcoming videos. And some treasury products like money market, treasury products like money market products and T-bills, treasury bills, CBLO, collateral borrowing, lending, right? Collateral borrowing, CBLO, treasury products, and funding and regulatory aspects. There is some funding and regulatory aspects, and in these treasury products also some important concerns points are like ADR, American Deposit Receipt, ADR, GDR, Global Deposit Receipts, FLL, Foreign Industrial Investment, debentures, bonds, long-term debenture, bonds, that is long-term and short-term, of all those things. So from these treasury products you can expect something like 3 to 4 marks. And from this introduction to management, these will be theoretical questions, 3 to 4 marks. Funding and regulatory aspects, that is some terms, CRR, SLR, LAF, repo rate, and RTGS, all those things. Some basic terms, CRR we all know, and SLR we all know, LAF, like this. So from this theoretical questions will come something like 2 to 3 marks. Treasury risk management, here also some risk management questions will come, like value of risk, the risk of worth of risk, and duration, definitions of the things like that. So from this treasury risk management, there are some risks in the treasury management, so that will cover. So it will come something like 3 to 4. This will be some directly questions. Derivative products, so this will be very important with respect to, that is 3 to 4 products. What are the derivative products? We all know, like forward product, so this will come like case study, and also and option products, future, and swap. What is swap? The interest rate and currency related to foreign investment. So derivative products with very important with respect to exams, can expect 3 to 4 marks. Next one is treasury and asset liability management. So here it is like ALM, asset liability management. It will come like case studies, that is 3 to 4 marks. You can expect 3 to 4 marks, that is baskets area, that is one. Some very easy, some case studies will come, we'll discuss, right? So first cover this module C. This is very easy, and then go through the some other modules, right? Then in the next module, that is module D, that is balance sheet management. Here also 50% will be theory and 50% will be numericals. Balance sheet management, in credit management we all know how to read the balance sheet, so this is completely like credit related balance sheet management, and those who are working in credit department, they are very aware of the balance sheet, so it will be easy for them to clear this. And in this we can expect like 20 to 25 marks from this module. And in all the modules, whatever the questions will come, that will be like case study, right? So 80%, 90% will be case study, 80 to 90% will be case study. So ready for this and practice like that only. And in that case study means questions will be like case study and option. The individual questions will be directly, what are this, what is the risk, they will ask like this. And this case study is helpful. In my view, this case study will be helpful to get the answer or to get some reference to ensure your answer, ensure your options in the exams. And in the BFM subject, how much you can prepare, but your effort in the exam itself will define how much you are going to score, right? So don't expect before the exams what you are going to do, just attempt the exam with positivity, right? So in this module D, we'll discuss some individual units. First unit is components of assets liability in bank's balance sheet and their management. Just remember, bank's balance sheet, that means they are asking this balance sheet with respect to banks. Assets for the bank, what are the assets for the bank? That is loans with respect to bank, that is the assets, and that is the deposits, they are the liabilities of the bank, right? So components, balance sheets and their management, and here the questions will be like some ratio, that is quick ratio, D ratio, current ratio. Just remember this, some definitions, and this is important. We can expect 5 to 6 mark of case studies and some balance sheet. So remember this, like this, banking regulations. Next unit is banking regulations and capitals. From this only some theoretical questions will come, like what are the banking regulations and capitals, the tier 1 capitals, tier 2 capitals, like this. That is tier 1 is main, that is core capital, and this is supplement capital, tier 2. So some theoretical questions will come, we can expect 1 to 2 marks. So capital adequacy, the Basel II view, that is capital adequacy, the Basel II view. That's also something we can expect 1 to 2 marks. That is capital adequacy. Percent we all know capital adequacy, that is 39% in India and 8% is BIS. So some theoretical questions will come. Then next one is supervisory review. What are the supervisory reviews? Some theoretical parts are there. This is theoretical parts like integral capital adequate assessment policy. Some policies are there. Library bank has its own ICCA, right? So this will be some theoretical questions. We can expect only 1 to 2 marks. That is pillar 3, that is market discipline. Disclosure, that is pillar 3. Pillar 3 means we know first pillar is minimum capital requirement. Second is supervisory. Third is discipline. So we are discussing about the discipline, market discipline. What should be the market and how the discipline of the market will be, like that. So go through the book, you can easily understand. We'll discuss like this also. And in the next unit, that is asset classification. This is important with respect to exams. That is, you can expect a case study, 5 to 6 marks of case study in the exams. Asset classifications and provisioning. There are some provisioning nerves, right? Asset classifications means like loan, and loans asset classification like NPA, when it will be NPA, when it is in SM0, SM1, SM2, and when it is substandard, and when it is doubtful asset, doubtful 2, doubtful 3, and there are some provisions. So this is very must 5 to 6 mark questions in the exams you can expect. So prepare this very carefully. Next one is liquid management. Liquid management, like types of liquids, that is type of risks it includes, that is funding and something like management, also time management and capital management, like that. So liquidity, right? You have to understand how the liquidity is getting managed carefully, observance of the input and output. So from this we can expect some theoretical questions like 2 to 3 marks. And interest rate risk management, from this we can expect some small numericals, right? That is modified durations CV and modified durations gap, some numericals. So we can expect like 2 to 3 marks of questions. RA, ROC and profit planning. RA, ROC, risk. RA, ROC means risk adjusted return on capital. This is ROC, risk adjusted return on capital. And here some basic percentage are there, 5% and 10 interest and then VAR, that is value of risk. It also includes value of risk. Discover the risk at the worst case. Value of risk means if the case is worst, then what are the risks? Value at the worst case. And profit planning, how much profit we are going to get. So this is very important. Also we can expect like 2 to 3 marks. So in this module, most important units is first one, that is comprehensive assessment, and this is provisions, and all some theoretical questions. You can go through this, but focus on this, right? Module D and module C, something like you can easily clear this subject, but focus if from A and B, just focus on A is also theoretical and also some rates are there, so complete module A also. And in B, if you are having the time, then go through some important topics as we have already discussed, like this and like this, make, and in this is what we are expecting as per the examination pattern. But if you are very sure and if you are comfortable in your own way, you can make your own strategy, because your own strategy can make you clear these exams, right? So prepare very well, and we are also going to discuss very soon all the modules individually, and prepare for your own. And most important thing is this BFM subject will make you understand the banking, many very important topics. So if you are interested to clear the exams, then focus on the important topics, right? Then only you can easily clear these exams in one attempt itself. So thanks for watching our videos. Thank you. Keep preparing.